University of Missouri Extension economist Ron Plain is our marketing analyst this week. We talked with Ron Wednesday afternoon about hog prices into February, the export market in 2014, and the continued effect of the porcine epidemic diarrhea virus.
Well, the number of new cases in the United States goes up about 100 a week or so now, so it's a lot of farms are having to deal with it, and we expect it's going to have a significant impact on hog slaughter next spring and summer. Certainly the futures market has gotten very bullish on the late spring summer contracts, and I think most of that is due to the problems they think sow farms are having with pig loss.
From the latest report, could you tell whether or not pigs per litter was down because of the virus?
Well, it was down. It was the worst, smallest increase over a year ago since 2003, I believe. So it was a very poor performance. No, you can't tell why, but PED is clearly the most likely cause for the poor number of pigs per litter.
Psychologically, does this have an impact maybe on producers who would otherwise think about expanding the herd?
Well, I don't know. I think you're going to see hog farms move to expand their sow numbers. The outlook is for a very strong price situation and low feed costs, so that's very encouraging. I think we're going to go ahead and see some expansion, and even though PED virus is probably going to wipe most of it out for some time.
Yeah. Once January passes, will it have been a profitable month for the hog producer?
Looks like it. Profit's not particularly large, but slightly on the positive side in the month of January, we think.
Slaughter weights in December were very high. Are they keeping pace here in January?
They're staying up. We've been running 6, 7, 8 pounds at times heavier than a year ago. That adds about 3% more pork per pig slaughtered. So even though we've been down a little bit in the number of hogs slaughtered, total pork production's been up because of these incredibly heavy weights.
Right, you kind of need that to get going here if PEDV still continues to rise, right?
Well, you know, heavy weights comes with a lower feed cost, but also we think in part due to the PED virus. Fewer pigs out there gives us more room in those finishing barns. Pigs grow a little bit faster, and we're not having another batch of pigs quite ready to crowd them out as soon, so they may be able to stay on feed a little bit longer.
So 2012 was a good year for exports. 2013 came down a little bit. For 2014 to be another strong year, which markets will need to be really good? Japan
is our most biggest market. Japan, Mexico, Canada are very consistent. It's the outliers, the ones that tend to fluctuate a lot are China. Sometimes they come in real big in purchases, other times not. South Korea's been buying a little bit less recently. So the volatility in those markets will have probably more to do with whether we export more pork this year than last or not.
Carcass weight and live weight basis prices, Ron, as we move into February, what do you expect to see?
Well, I think on a carcass weight basis, we're going to see prices in the lower 80s most of the time, and then start to move higher as we get closer to the summer. On a carcass weight basis, the futures market's predicting a lot of $100 prices for hogs in May, June, July through the summer months. You change that to a live weight basis, we're in the mid 70s for the peak, maybe the upper 70s for hog prices come summer, and now we're mostly in the upper 50s.
And for the consumer, what should he or she expect to pay at the grocery store for pork, maybe as you look at that into spring?
Well, early in the year, usually some fairly good buys. The average price of pork usually runs somewhere around $4 a pound in grocery stores, and probably fairly good bargains will continue through most of the spring. Normally there's about a month lag between the run-up in prices at the farm level and when it shows up in the grocery store. So consumers will get decent prices for a while yet, we think.